Now, as far as payment and settlement scheme system concerned, I'm sure you will have in legal also, there is one chapter, okay, Payment and Settlement Act, and thereafter our module C will also be discussed with you in detail about all these aspects. So therefore, I'll just try to clarify you only the superficial aspects of payment and settlement system. Reserve Bank of India is a regulatory authority. What job it does? It develops to have a safe, secure, and efficient payment system. And as usual, in the banking, there are many paper instruments are there, such as check, DD, or pay order, or a banker's check, etc. Whereas electronic channels are introduced by Reserve Bank of India, such through RBI's platform of Infinet, Indian Financial Network. Indian Financial Network. Am I making some sense to all of you, my friends? Are you with me, or am I going very speedily? Is it the speed is too high, or is it okay? Are you okay with that, the speed? At least I deserve to be responded, because ultimately, accordingly, I will modulate myself. Friends, I will modulate myself accordingly. If whether my speed is fine, then no issue. Because many people complained about that. They say that you are very, very speedily going, sir. We are not in a position to catch you. Thank you so much. Those who are responding, at least I'm getting a message that my speed is adequate. Okay. Okay. Now, next is the retail payment system is managed by Reserve Bank of India through check clearing and National Electronic Fund Transfer, whereas large value system is managed by Reserve Bank of India through RTGS, okay, for fund transfer, and security settlement system for government securities, foreign exchange clearing for transactions involved in foreign currency. So that is what is a payment system management by Reserve Bank of India. Okay. Now, what is RTGS? I need not have to tell you, because most of you are aware. Any RTGS is a 24/7 by 365 days system available for transferring money from one account to another account with a different bank. From one account to another account with a different bank, that is RTGS. Why it is RTGS? Because it happens on real-time basis. Just now you do it, the transaction gets settled anytime within half an hour maximum, because it is a credit push transaction. Money is already taken out from the customer's account and that amount is pushed. Therefore, it is known as credit push transaction. Okay. And minimum amount of transaction 2 lakhs, maximum amount no limit. I think charges are also, most of you know that inward RTGS no transactions, outward either 24 rupee 50 paisa or 50 rupees, 2 to 5 lakhs and more than 5 lakhs. Very, very simple explanation on RTGS, and I don't need, we need to spend more time on that, because these are all real time. You all every day you are doing it. The NEFT, you please make a note that it is also now 24/7 365 days available. It is also credit push system. But what is the difference? Here the transactions don't happen on the gross basis. It happens on the net basis. Means amount to be received from other bank, amount to be paid to other bank. The net is arrived, and that's the way settlement happens on every half hourly batch. And that's why it is called as a different system than RTGS, National Electronic Fund Transfer. And secondly, in the NEFT, there is always a positive confirmation to the remitter is being available under SMS as well as email. Charges, no, you don't get a question. And since even if you get a question, you are a practical banker, I need not have to spend time on that. Okay. Now, next is the SEBI. What is the SEBI? I don't think there is written here anywhere. SEBI stands for
Securities Exchange Board of India.
Very good. Securities and Exchange Board of India. What that Securities and Exchange it carries out? It actually controls and supervises the equity market and the debt market. Equity market and the debt market. And within short while, you will come to know about in detail about the various instruments under equity market and various instruments under debt market. It actually supervises the stock exchange. What is the stock exchange? Stock exchange is a place where the various securities are exchanging the hands from seller to buyer. And that too, this happens whether it in a physical form, it won't happen in a physical form, it happens in a dematerialized form. And in order to manage the demat format, there are two important depositories are available, and those depositories are NSDL and CDSL. NSDL stands for National Securities Depository Limited. CDSL stands for Central Depository Services Limited. And bank may act as the depository participant of either of these two central main depositories, and bank may act as a participant for depository. Okay, either for NSDL or for CDSL. Okay, and on behalf of NSDL, on behalf of CDSL, banks maintain the demat account. Hope point is clear. SEBI manages the stock exchange. And what is stock exchange? Stock exchange is a place where securities are exchanging from buyer's account, seller's account to buyer's account, and that too in a demat form. And the price determination happens in stock exchange. Okay, price of a particular security is determined by the demand for the security in the stock market or the supply of that security in the stock market. Okay, so stock brokers are there who participate in the stock exchange on behalf of the investors. Okay, investment bankers are the bankers, means banking which is being done as a specialized service, guiding people where to invest, how to invest, and how to make more money out of the money funds available at the disposal of managing in the stock exchange. That is what is a investment banker's role. What is the merchant banker? Merchant bankers are the bankers who actually facilitate the corporates to issue of the share, raising the equity or raising the debt from the capital market. Okay, raising the money, raising the debt, or raising the equity for them through the stock exchange, through the capital market. Okay, either by issue of shares or by issue of bonds. Foreign institutional investors are the investors from abroad who are permitted to participate in the stock exchange in a country. Okay, and they can invest in our stock exchange on behalf of investors abroad. Then mutual funds are the companies, asset management companies, who actually gathers money from the investors for the purpose of investing in these securities, maybe in the bonds, maybe in the shares, maybe in the government securities. Different kind of investment opportunities are there, and these asset management companies through a mutual fund scheme manages the money on behalf of customers. In detail, we will learn how many different type of schemes are there, how many different type of funds are there. We'll learn in a short while. As far as custodians, depositories, I explained to you. As far as custodian concern, the custodians are the trustee banks who actually holds trust shares or securities which are being floated as a dematerialized shares for the purpose of trading. Okay, and that's what is the role of a custodian. So these are different participants in the capital market. Hope you have got a little bit idea, because our topic is only overview. Our part is only overview. Okay. Second is IRDA. IRDA is an Insurance Regulatory and Development Authority. Okay, it actually regulates the framework for insurance companies. It supervises life insurance companies and general insurance companies. General insurance includes the insurance for the materials, insurance for the livestock, insurance for the health of the people. All those insurances are part of that, including the agriculture insurance also is a part of a general insurance, whereas life insurance is a part of the insurance of a life of a particular individual. Okay, then it regulates the pricing as well as the cost structure of the insurance products. Okay, how many insurance companies are there in a country? Life insurance companies are 24, out of which one is a public sector company, that is LIC. and shortly it is getting divested. Then general insurance companies are 33, out of which 4 are the public sector. 4 are the public sector general insurance companies, as well as the one another is Agriculture Insurance Company of India, then ECGC of Export Credit Guarantee Corporation of India. So out of 33, 6 have gone. So now 27 are the other insurance companies which are of private in nature. And in addition to all, there is a reinsurance company. General Insurance Corporation is the only reinsurance company available in India as on today. Anything you wanted to know more as a general overview? Hope this is sufficient for you. Then now let us come to the part called as a developmental role of Reserve Bank of India. Reserve Bank of India plays a very crucial role with regard to developing the financial market. And in order to develop the financial market, they have so many institutions are established by Reserve Bank of India. One such institution was Unit Trust of India, which was started in 1963, and it is the first company in our country which engaged in making the people to participate in stock exchange through the units sold by Unit Trust of India. Okay, so after the launch of many mutual funds, then the relevance of Unit Trust of India was deemed or reduced, but otherwise Unit Trust of India was the only mutual fund or unit making company, unit issuing company in our country. Then second is the SEBI. SEBI is a Small Industries Development Bank of India, started in 2nd April 1990. And basic role of SEBI is promoting, financing, and developing MSME sector of Indian economy. And in the process, it coordinates the functions of various other institutions which are engaged in the similar activity, that is promoting, financing, and developing MSME. What is MSME? Micro, small, and medium enterprise. I'm sure while completing the module B, you had got in detail explanation about micro, small, and medium enterprise. I will not invest my time on that. Then NABARD. NABARD is an institution which started in 12th July 1982, National Bank for Agriculture and Rural Development. It is the supervisory body for overall supervision on regional rural banks and apex cooperative banks. But please don't mistake, regulation is the job of RBI. Now, including the cooperative banks are also under the regulatory control of RBI. NABARD performs the role of only supervisor. Okay, then this is another most important company which originally started as Discount and Finance House of India, but subsequently that is merged with State Bank of India Gilts Limited, a subsidiary of SBI, and it actually engaged in money and debt market. Money and debt market. What is money market? What is debt market? Please wait. I'll deal that aspect tomorrow, not today. Okay, I'll deal that aspect tomorrow. Then Securities and Trading Corporation of India. It is one of the first primary dealer, which is a subsidiary company of Reserve Bank of India, but thereafter the stake was divested to various public sector companies, banks, and then it was made as Securities and Trading Corporation of India Limited, STCI Finance Limited, and even thereafter the demerger was done, and then STCI Primary Dealer Limited is a company as on today operating, and it is operating as wholly owned subsidiary of STCI. Okay, STCI, which is exclusively engaged as primary dealer. And what is this primary dealer? What job it does, how it works, we will learn when we talk about the money market. When we talk about the money market. Then National Housing Bank is a apex organization for various housing finance companies. It is a wholly owned subsidiary of RBI. Okay, it performs the 3 different type of jobs: regulatory jobs, financial support job, and promotion job. This regulatory jobs is registration of housing finance companies, asset liability management of housing finance companies, providing policies for them, and supervising them. Okay, and it provides support as a refinancing to them. Okay, refinancing to housing finance companies or those companies which are engaged in funding the projects, housing projects. Okay, then direct finance to projects by various housing agencies acting as a special purpose vehicle or guaranteeing bonds of housing finance companies. That job is done by National Housing Bank. And as you know, DICGC, I think all of you are aware, DICGC is a Deposit Insurance and Credit Guarantee Corporation, started in 1978, 15th July, and earlier it was guaranteeing the all small loans, agriculture as well as the MSME, and this subsequently the loan guaranteeing part is removed from the DICGC, and now only the job of providing insurance, deposit insurance is only the job left over to DICGC. And under the DICGC now job is left over to only for providing insurance for deposits, and that too which banks? The only scheduled commercial banks. Primary cooperative societies are not included, not a part of it. Okay, primary cooperative societies are not a part of it, but primary cooperative banks are part of it. Okay, deposits up to 5 lakhs per bank, per customer is insured, and a premium of 12 paisa per 100 rupees is charged by DICGC, which is paid by the bank and borne by the bank. And out of the total deposits, government deposit, foreign deposit, and the interbank deposits are excluded. Okay, is it clear, my friends? IFCI is a company now. It is listed only for the namesake. Earlier, it was doing a fantastic job. After introduction of SEBI, I think the role of IFCI got reduced. Okay, it is a body established in 1948 as a statutory corporation. Thereafter, it was converted into IFCI Limited. IFCI Limited. It provides the financial support in the form of long-term loans, bigger industries. Nowadays, the role is not that big. And as a support activity, this part might have already completed. I don't talk much about that. That is CGTMSC. CGTMSC is definitely covered already there under module B. Okay, if you have a doubt or question, please raise, no problem. Okay, as far as ECGC concerned, Export Credit Guarantee Corporation, established in 1957, and it provides the insurance or the guarantee to the funding given by the banks and financial institutions for export activity. And it covers the political risk. It covers the political risk as well as the commercial risk. And what is political risk, what is commercial risk is explained in detail. Have a look on that. And for your sake, if you want me to read, I'll definitely read. For example, suddenly government restricts import in that particular country. Then naturally the payment goods get halted somewhere, or goods, whatever goods are manufactured, they cannot be sold in that particular country. And as a result, the exporter may find difficulty in finding the buyer in other country. And to provide support to that particular lender who has financed to the buyer, this policy is being issued. Okay, then any government action which may block or delay the transfer of payment. For example, recently Afghanistan, there is a power change, and when the power change, then so many rules, regulations also undergo a change. Okay, which includes war, civil war, revolution, civil disturbance. Okay, any new import restriction or cancellation of valid license, all this comes under the political risk. Or in a simple way, any interruption wherein our goods which are gone out are being blocked, okay, which are resulting in payment of additional freight or additional charges. Commercial risks are insolvency of buyer. Buyer may get insolvent and he may not be in a position to pay the money. So the buyer is not making the payment in a reasonable period, that is within 4 months from the due date, then the risk will be starting playing, and as a result, then the ECGC will provide the support. Okay, then the last area is under developmental role is directed credit, priority sector lending. I am sure Module B has in detail covered it. Lead bank scheme, it's already over. Service area approach, already over. Financial inclusion, now KYC, already over. And sector specific refinance is the job which RBI does. Okay, nowadays people are not seeking any refinance because liquidity is very high. Reserve Bank of India manages this CRILC. What is CRILC? Central Registry for Information on Large Credits. Okay, large credits. Okay. It is for any advances which are more than 5 crore, and that too they happen to be classified as the SMA 1, SMA 2, and then automatically required to be reported to CRILC. And nowadays, recently, Reserve Bank of India also issued guidelines for account aggregator network. Since it is so latest, you may not have to keep a relevance on that, because for your examination purpose, it is not a part of syllabus. And this regulatory restrictions on lending, I think this part is also covered under Module B, that no loan or no advance against security of bank's own shares. I'm covering it at the repetition because exam point of view, very, very important. Bank cannot give loan against their own shares, and they cannot give the loan against a partly paid shares of other companies. Bank cannot give loan against certificate of deposit. What is certificate of deposit? Wait for tomorrow. What is Indian depository receipt? Wait for tomorrow. So against all these things, bank cannot give loan. Bank cannot give loan against fixed deposit of other banks. If someone comes to the bank with FD of other bank, bank will not give the loan. No additional facility by any bank to a listed willful defaulter. No bank can hold shares in a company as a pledgee more than 30% of paid up capital of the company, or the paid up bank's capital and the reserves, whichever is less. Means whichever is less, 30% of that. Beyond that, bank cannot take a shares of company as a pledgee. Okay, where, and secondly, bank cannot accept the shares of a company where the management or MD or a manager of the bank is interested in that. Bank's aggregate investment in shares, CDs, bonds cannot be more than 40%. Okay, management and avoidance of concentration of credit risk. Therefore, Reserve Bank of India has provided the exposure limits, how much maximum finance you are supposed to give to a particular individual borrower against the capital of the company. At the cost of repetition, I have discussed this because this is very, very important for examination. Bank cannot give loan for the purchase of gold, for purchase of open plot only, okay, or to buy the shares for trading. Okay, for the purpose of investment in IPO, bank may finance up to 10 lakhs, but to buy a shares of a company, bank won't finance. Okay, and in order to include a particular bank in the second schedule, particularly the cooperative bank, to get included in the corporate the second schedule, the rules are like this, that demand and term liabilities should not be less than 750 crore. Okay, and they should comply with all other stipulations which are supposed to be complied to be a part of the scheduled bank. That is, they should not act detrimental to the society. They should comply with all the reporting issues, and that's the way they get included. Okay, and in order to get included, these are the stipulations. DTL not less than 750 crore, CRA minimum 12%, net profit 3 years continuously profit, gross profit not exceeding 5%, and the CRR SLR securities compliance must be there, and no major supervisory concern. This is what is the overview of today. Okay, retail banking, I don't think much is there for discussion. What is retail banking? Providing finance to different type of customers. Multiple products are there, multiple channels are there, multiple customer groups are there. I don't think we really need to invest our time. Wholesale banking is providing banking for a big entities, okay, business in industrial houses, mostly corporate trading house, including multinational, wherein fund-based service, non-fund-based service, other support service such as cash management, channel financing, providing forex desk, okay, corporate salary management, their ECS management, or a tax collection, loan syndication, payment gateway management. These are all the activities comes under the wholesale banking. Anyone wanted to know anything more about any one of the aspect, please? Or if you are aware, I don't need to spend time, but please make a note. This is very, what is cash management service? It is already covered in the module B, but loan syndication is also covered. Payment gateway, I think all of you are knowing today that in order to manage the payment receipt from a particular channel, there is a gateway required. And providing that gateway is a service provided by many financial intermediaries, including the bank. Bank also can provide a finance payment gateway so that people can directly make payment through by using that payment gateway and to get account credited. You might have seen that when you go for IRCTC, it will ask you which payment gateway you would like to use. ICICI Bank, Axis Bank, etc., etc. Big list will be there, and you may have to choose any one of that list. Okay, so like that. What is a forex desk job? Forex desk job is providing the foreign currency, or selling the foreign currency, buying the foreign currency, making the letter of credit available for them. Okay. So making the guarantee in case they need, that is making available to them. So what is international banking? International banking is catering the banking requirement for cross-border transactions, means out of our country transactions, and there importers are involved, exporters are involved, and as well as our non-resident Indians are involved. Okay. So as far as exporter concerned, there are many things bank can provide, such as export bill negotiation, export bill discounting, export bill purchasing, export bill collection, or providing bank guarantee, a rupee advance for export bills, or export LC advising, export LC confirming, supplier credit. What is all that? I think module B has covered you the LC mechanism. And in the LC, there is a role of advising bank. There is a role of confirming bank. And when bank does this job, actually bank earns commission for that. And as far as importers concerned, importers may seek a support in the form of import collection, bill directly servicing, or direct import bills received by the bank, and then bank making payment by debiting the account, or advance payment sometimes need to be made for imports. So that's the way this importers. Universal banking is providing all the banking, insurance, mutual fund, capital market support, investment products under one shelter. And in the 2000 period, the banking has made this particular change, and the banks are permitted to go on with this universal banking activity. Then I think I'll stop at the juncture because though there are 2-3 aspects left over, I want to give the time for anybody who wanted to know anything with regard to whatever I have covered today, or anything which you want that I must cover, so that at least tomorrow I can structure myself and make my class inclusive of those aspects. I'll make a note of them. Please go on telling it, please. Hello. Yes, I'll stop the presentation so that I can interact with you all. Yeah. Yes, friends. Any doubt, please? Anything which you wanted to know? Hi. We have got time. Don't worry. Yes. Hello. Arey, kuch to kuch jawab de do. Can anyone interact either me with the chat box, in chat, or in by unmuting the mic? Can anyone tell me? Okay, how did you find the overall overview on the various aspects of Indian financial system? It was overview. Can you explain? Mutual fund companies. You want mutual fund companies, Mr. Kedar, or marginal standing facility, MFC?
Marginal.
Yeah, marginal standing.
Fund.
Very good. Definitely. Okay. Anything else? See, what happens? No, repo and reverse repo. Repo is nothing but borrowing money from the interbank market or from the Reserve Bank. Okay. When bank wants borrowings from RBI. Actually, RBI expects I need to sell. Because, for example, assume I am the bank, State Bank of India, and I want to go to RBI for raising money. Then I need to sell the securities to RBI and take the money from RBI. Okay. And to do so, I must have the securities more than SLR securities. Okay. I cannot use the SLR securities because SLR is the stipulation I must comply with. Is it clear? Only more than SLR securities I can sell and I can get the money. But someday, on any one day, I may be in such a need that I may not have a securities more than SLR. I may be having only the securities limited available for the purpose of selling. Now, can I sell? And I am selling with a purchase promise, repurchase promise. Therefore, it is called as repurchase, repo, repurchase option, repo. Okay. And that when I don't have securities, then what I should do? That is where actually Reserve Bank of India says, okay, no problem. You use the SLR securities, but how much? You can use maximum 2% of NDTL. Means I must have to maintain 18%. But now Reserve Bank of India permitted me to issue to use only the SLR 16%, and that 2% I can sell to RBI. Okay, is it clear?
Okay. Yes, sir.
That is what marginal standing facility, and that's the where it charges more. Is it clear? Now, notes issued by RBI. But who issues 1 rupee coin? The all coins. Okay. Okay. All coins and all notes, to be very frank, are printed, minted, issued by Reserve Bank of India. But the currency note is the issuance of Government of India. Coins are also issued by Government of India. Is it clear? But for the purpose of technicality, printing and minting is done by the Reserve Bank of India on behalf of Government of India. Is it clear? Is it clear, Mr. Sheikh Abdullah? See, 1 rupee note and coins, that is the on behalf of Government of India only. Whereas 2 rupee note to how much maximum? 10,000 rupee note can be issued by Reserve Bank of India. Maximum is 10,000. Good. Any other question, please? Okay, I'm sure that I had gone with speed. How do you agree that I was perfectly speed? I don't know. To be very frank, I know that I was over speeding. Anyway, I realized myself that it was over speeding. Yeah, international banking. Don't worry. Wholesale banking is, see, retail banking is what? Making the needs of the individuals or the small business people catering. Whereas wholesale banking is catering to the requirement of a large corporate, where multiple kind of services may be required by the same person, such as fund-based service, non-fund-based service, or the export service, or the all that kind of bigger services when they are required, large volume, crores of rupees, 500 crore, 200 crore, 100 crore, like that when lending is required. So definitely that is for the wholesale bank, whereas the retail banking is only up to a small value. Now, what is that value? For the purpose of international clarity, it is 5 crore. Okay. So more than 5 crore loan is considered as a corporate loan. Less than 5 crore is a retail loan for the purpose of risk management. But for the purpose of us, retail banking is catering to the requirement of individuals or the small businesses, whereas large business houses requirement comes under the wholesale banking. And international banking is exporters, importers, non-resident Indians. Now, what are all the different services they require? Exporters require, importers require. That is what I have told. See, exporters, when they sell goods, they raise the bill, and that bill need to be collected, or that bill need to be received. When it is received, bill of exchange, that can be discounted by the bank, or there may be a possibility letter of credit might have got opened. That letter of credit advising to our own customer who is an exporter, confirming that particular letter of credit. These are all the services which can be sought by the exporter. Importer, what he requires? Importer requires to issue a letter of credit on behalf of him. He may require a bill when it comes to him that may be debited to his account and payment may be made. These are all the. Then non-resident Indians require an account in the rupee account or otherwise foreign currency account. Since these aspects are already over, I did not dealt in much detail. But if you want, tomorrow again, we can spend little time on that and we can carry on. And there is today's part is left over. Very, very important part left over. And I wish tomorrow we will complete this in the beginning and then only we'll move to tomorrow's leftover part, that is ADR, GDR, ADR. Okay, American Depository Receipt, Global Depository Receipt, and the Indian Depository Receipt, and then participatory notes, and then we will cover the few aspects relating to MCQs on the module A. Okay, that today's day number one's some MCQs. Okay, and then we will move on to the tomorrow's topic, that is money market. Okay, hope I'm fine today. As far as today concerned, you are already getting late, and if you still have any questions, please don't hesitate. I'm absolutely open for those questions. Tomorrow I'll definitely make it clear to you whatever area left over, but don't keep questions to you, because you are investing your valuable time to succeed in exam, and our job is to make you successful in exam. How many times max and minimum monetary policy done in a year? Very good. Actually, let me tell you very frankly, my dear Arun Kumar, it is an annual credit policy. How many times policy? Please, Arun Kumar ji. Annual credit policy statement issued by Reserve Bank of India in the month of April, and thereafter it is reviewed bi-monthly. It is reviewed bi-monthly. Bi-monthly review means in a year, how many reviews are happening? 6. Good. Such questions I really appreciate. Fantastic. Very good questions. And I now today on this backdrop, I once again humbly request you, visit my channel. You will have all these topics in detail discussed there. Okay, all these topics are discussed in detail. Okay, you will have a fair idea, because there each topic I have dealt in 10 minutes. So 10 minutes multiplied by 12, 13, 15 minutes. So 120, 130 minutes are invested there. You can have in detail, and as and when you want, you can visit. No. So that is the way you can make multiple time visiting my channel, where you will find video on most of the topics which I discussed today. Shall I call it a day, my friends? Okay. Or any other questions, please? Okay. If there are no questions, can I get a feedback, frank feedback on today's session? Frank, absolutely. After a long gap, I'm handling module A. Okay. After a long gap, I'm handling module A. That is the reason I want your feedback. How do you find this session? Hello? Can I put it either in a chat or otherwise give me some reaction? I'll be very, very delighted to have. And any feedback would be most welcome. It is not that you must always appreciate or say the good word about me. Okay. Okay. Nice. Okay. What we will do tomorrow, we will try starting the session on time. On time starting will help us a lot, because lot of time when we have, we can go very comfortably, very coolly. When we have a reduced time, then it will be a pressure on all of us to go on. Please understand those part, that is the general part relating to type of banks, which are all how many types. Okay, that part please be ready, because few questions are always asked on that part also. Okay, nice of you. Good night to you all. Let us meet tomorrow. And tomorrow we'll be talking on money market in full. Okay, money market instruments in detail. What is repo? What is reverse repo? What is market stabilization? What is the government security? What is treasury bill? What is bond? All those aspects we'll be talking tomorrow. So be ready with that. Thank you so much. Have a wonderful time. And I wish you all will have a wonderful time now onwards. Bye. Good night.
If you like our content, do like, share and subscribe.